Hi there, my name is Taylor. I'm here with Hack&Co at Remax River City, and we are talking with Cheryl Wilkes. Cheryl, you're from Dominion Lenders, Brokers for Life, and we
Yep.
talk to so many different people regarding real estate while they're going through the transaction. But I really feel as though renewals is this thing that just happens to people.
Yep.
You know,
Totally.
yeah, it starts in your mailbox and it seems to be at random. And all of a sudden, you'll get a notice from whatever lender that you're with that it is that time. Now, I'm going to suggest that the vast majority of people are going to sign the information that's given to them because often there'll be some renewal terms that are sent over
Yep.
to them.
Yep.
And basically, the lender will say, hey, listen, if you just sign here, we'll just get this out of your way and we'll get your mortgage all renewed and off we go. Right.
Yep.
So that's obviously the path of least resistance. But I wonder a little bit. And what I wonder about is that the number that they're giving you in that case, is that number really the best number for you? Or did these big banks end up A/B testing a whole bunch of numbers and they found that this was the highest interest rate that the average person would not question? How do you?
And 100%. It really is that. I mean, and we've seen it over the last couple of years, especially where, I mean, anybody who's like watching the market at all has seen like our economy has been all over the map. Interest rates have been all over the map, and it's been on the news, of course, like everywhere you look about housing markets and interest rates, right? And I have seen what I would honestly call the spectrum of chaos with renewals and rates. Two people, similar situations in terms of, good employment, and they qualified with great, credit scores and things like that, say 3 to 5 years ago, are coming up for renewal with literally the same lender. And I'm seeing completely polar opposite offers. And there doesn't seem to be any rhyme or reason to this, but there's definitely some sort of like magical banking math in the background that we're all just sort of like, okay, I guess as the general public, and don't, like you said, it's kind of that like threshold of like, where do we think the person would sign without kind of maybe shopping around or asking a second opinion or getting that stuff, right? And it is the path of least resistance, like you noted.
Yeah, so you can like support what I'm feeling here, where
Mm-hmm.
the banks can't even really tell what's going to happen tomorrow,
Yeah.
and normally we can correlate some of the things that they set up for us being either to be uh with the bond market. You can kind of match up the rates that they're offering with what's happening in the bond market, and right
Yeah.
now I imagine that that's very limited. It's very tough to kind of match up what's going to happen because
Oh,
there's a lot of markets that are fragmented and it's resulted in a ton of turbulence.
and the bond rate has just been like a scribble anyways at the best of times for the last little bit with the bombing down and then things like that. Like it's a bit of a like, shake the little thing and wait for the, little comment to come up, like what's going to happen? I have no idea. Nobody has the crystal ball right now. So they're all sort of being a little hesitant with what they're offering, I think, when you're looking at those longer term type options for renewal. But again, it doesn't seem to really be any rhyme or reason sometimes on some of these offers that people see. They can be amazing and they can be mediocre.
I definitely agree with that. And I think that in markets like this, there's going to be a high potential to basically get a deal because things are bouncing around. They're a little bit chaotic if you're looking for that, but there's also a high potential to overpay. With banks hedging, they're going to probably, try to pass off something that would be pass offable.
Yep.
That's really what it ends up to with being when you get that renewal paperwork in your mail. So
Exactly. That mediocre type offer.
yeah, so to kind of take us through what the strategy would be in dealing with a mortgage like a pro, I think that the first thing is that you have to consider that renewal offer is actually an offer, right?
Yep.
That bank is making you an offer, so whenever you get an offer, you have the ability to accept, decline, or counter. But in
Yep.
the meantime, it's probably going to serve you best to do your research. So
Yep.
what does it look like in a situation like that? If I were to come to you and I had my renewal in hand and I'm saying, hey, listen, the bank that I'm with is willing to give me a renewal. You really are my first call because I want to know what else is happening in the marketplace. As a mortgage broker, the lenders that you can check, like, do you check 5? Is it 7? Is it 700?
Generally, the go-tos is about 20-ish that we would look at in terms of, your mainstream person who wants kind of best rates and terms, who also has good credit and all of that kind of stuff, right? There's a whole load of them in the industry. Some of them are going to be your alternates and your privates and stuff like that we don't even bother with because they're not competitive in that market, right? But your big banks, your credit unions, some of the lenders that people don't even realize are big banks like ICICI or Manulife Bank, or those guys, they still hold bank status. They're all under the same federal mandated rules, but everybody's got a slightly different tolerance when it comes to qualifying. And in terms of those rates, they can be all over the place sometimes, right? Just based on where they are in their calendar year even, right? And are they full up for the year? Are they fighting for business? And we watch these kind of spectrums happen with almost every lender to know what people don't know on the backside is like, is this lender even really fighting for business right now? Maybe, maybe not.
Yeah, I'm wondering what it looks like because the risk tolerance changes, and they might have
100%.
felt like they were in a high risk situation 6 months ago and they're making decisions based on that. So
Yep.
it could just be that, it was the right institution at that time and maybe that has changed.
Yep. And I'm finding that a lot this year, where what worked 5 years ago or 3 years ago when people got started, even sometimes, those extra terms on prepayment privileges. How quickly do you want to pay off your mortgage? Are you with a mortgage that gives you 10% per year or 20% per year? For some people, that's a mute point. They don't care because they're not doing much. But for the people that are focusing on saying, I don't want this big debt for 25 to 30 years, that can be super important.
I totally agree. And I think that that's going to come into consideration is like, what's your plan as well? Because some people might be like making a decision in the next few years and choosing the right product. The product that they chose before may not be the right thing for them now. So
Right.
I guess like once we understand that lender is making us an offer and now we're going to go out and research, is this actually a good offer is the question.
Yeah.
When we talk to you, I think that the illusion would be that you're going to offer us something that's cheap and not very good.
And I mean, I guess it's all again, it's that spectrum of figuring out what's going to suit the best plans forward, right? So like you said, it's that flexibility for the person who says, we like our house, but we might move again in 2 years. Then a 5-year fixed doesn't probably fit them, right? Or if they do want a 5-year fixed, we better make sure that we got a lender who's going to be flexible with that porting piece to move that mortgage from house number 1 to number 2 when they do upgrade, and make sure they're not going to get stung with some ridiculous condition, which makes life crazy, right? But it's all the things that, unless you're talking to somebody who does this all day, every day as a specialist, and that like knows what they're doing and is working with that kind of, client where you're planning forwards, even 3, 5, 6, 8, 10 years ahead, it's making sure that the plan suits the mortgage renewal.
I totally agree with that. So we can
Yeah.
check it out and take a look at it, not even from the perspective of how does it just compare with whatever you've been dealing with up until now, but is this actually going to be the right form for what's next?
Exactly.
Now, if somebody does decide to make a change, like it sounds like it's a giant hassle. How long does this process normally take if someone would end up switching lenders?
Generally speaking, we do still have to prove, of course, that you can still afford your mortgage when you're switching to a new lender. They need to know that that's doable. So some income documents obviously are needed. The mortgage statement they've already got on hand once they've got, their renewal package that shows up from the lenders. And a lot of that stuff is available, of course, in online banking nowadays. Almost everybody's got portals and, easy access, right? But I mean, from a process and perspective, 3 to 4 weeks at most normally. And that's really not normally our part of the process is overly slow. It's because of the fact that almost every lender uses internal lawyers. 99 times out of 100, I would say probably even more than 99 times out of 100, there's no fees for anybody to be switching lenders, especially if it's just, I owe 200,000 and I'm moving 200,000, right? Where there's no equity being pulled, there's nothing being touched. That's what we call like a switch or transfer, where you're literally just saying, I just want to continue on my merry way. The next lender will pay any transfer fees, any discharge fees, any land titles registration costs. But because of that, they use specific internal lawyer firms or like title insurance companies to do that. And that's everybody, like big banks, credit unions, broker access lenders, they all use the same like 2 guys to do these types of transactions in Canada.
That's interesting. So based on that, you're telling me that there's going to be a timeline to it, but it looks like there isn't going to be a cost.
No.
Well, that's really good news. So then basically, if you're able to find me a better deal, then it just is a better deal. There's not going to be a lot of strings attached.
Yeah, then it's just a couple of income documents. And I mean, I know you and I have chatted about it before, but I mean, we've got everything from, I can pull all your CRA documents for you now and all these lovely secure server things, right? Where I'm like, just grab me a job letter and a pay stub and maybe that's about it. So
Yeah,
we can keep it as painless as possible.
and that's something that's definitely evolved over time, because it used to be that if I didn't keep my CRN for 1973 forward, then I was not
Yeah, totally.
easily get a loan. And some of these documents are hard to come by. And then if I had to contact CRA, it was going to be 2 weeks and they were going to come by mail to like my old address.
Yeah.
And you're saying that right now, like if you need documents for me on CRA and I was to sign what you need to be signed.
E-sign, not even hand sign, e-sign.
When could you have those?
Oh, they show up about 15 minutes later.
That's amazing. So in this situation, so when I get my renewal documents, if I were able to give you a quick call and say, hey, listen, I think that this is what my bank has offered me. What can you do? You would be able to probably run through an application with me if all the decisions makers were there, maybe in 30 minutes, be able to pull the documents if I don't have them from CRA, and then I could send you things like a pay stub and so on. And then from there, if things looked good, I'm just waiting to sign off on this in a few days.
Pretty much. Yep. And the legal entities that, or like the title insurance companies that facilitate that switch, last year, of course, pre-COVID, they were coming to your house or your workplace to sign documents. So you're no longer driving to go see your lawyer. And they made it even one step farther, of course, through COVID, that they literally will now like drop it on your front door and do like a Zoom call with you at your convenience. So you can sit at your own kitchen table and just say initial here, no problem. Yeah, all good. And it's really just, it's a much smaller package, of course, than when somebody purchased, because their name is already on the title. They already own the place. It's really just updating who's the lender and how much.
Oh, that's amazing. I didn't realize how fast it had gotten now. And really now, when you take a look at the most common people out there getting these 5-year fixed mortgages and what those types of rates were 5 years ago, I think that 5 years ago, people were closer to like that 3 and change mark.
Yeah. Yeah.
And so what does the savings look like as compared to what we're seeing now?
It's big, right? I mean, if people are dropping from 3% to 2%, generally speaking, most people don't actually know that mortgages are kind of skewed. So like your first sort of 5 years, you don't always pay off 20% of that original mortgage amount. Mortgages are front end loaded on in terms of interest. So back in the day where you'd renew even a similar rate, you'd renew your mortgage and you say, well, I'm 20% done. I've paid for 5 out of that 25. I should be paying the same kind of payment. And they were all getting shocked when those payments were going up because we're saying, well, you kind of paid off almost 20%. That gets better in your favor down the road. The nice part is that this switch from like, the 3% to 2%, people are actually watching that payment drop, where in a lot of cases, when that's happening, I'm advising people and saying, listen, you got used to paying this bigger payment. So maybe you're going from 15 down to 13. Well, why don't we just keep it at 15, keep paying the same amount, and now you are ahead of the game and you are paying that mortgage off quicker and you haven't changed your finances. You just got a better rate. So it's better bang for buck, and day to day, nothing really hiccups in their world, right?
That's interesting. The thing that I'm really concerned about right now is that some people will see their renewal documents, think it's such a better deal than it was last time, that they should just sign off on them. And that's like, I really think that they may be leaving some money on the table right there. Because this is obviously, like most things, it's almost like carnival games where there's a little rig. It's not designed to be equal and even. And if it's easy, it's normally not the best thing for you, right?
100%.
So that would be the one thing that I would be worried about is that people are just approaching this and being like, this is a good deal. And off they go, not knowing that it's not a good deal for now. It was a good deal if you back in time. But now if we fast forward in time, I don't know that deal will be as good or will be as meaningful full to you going forward.
And I mean, a 15 to 30 minute conversation with somebody generally to say, what's the plan? Where do you live? What do you like? What is your plans going forward? And like the basics, I would say 90% of the time we can figure out if that what they're being offered is pretty good, right? I mean, if somebody's lost their job 3 weeks ago, well, you probably unfortunately aren't going to qualify to move that mortgage. Okay, well then, let's at least get you a good idea of where they should be, and at least you can maybe go back and try and pick a fight with your lender, see if they'll budge with you, right? Or, I mean, some people have seen credit hiccups in the last few years. There's always situations where staying where you are is the most security, but it's having that conversation to find out, is it actually, like you said, in their best interest? And are you even picking, even out of that list, the best option?
Yeah. And, I really like that idea where, if it wasn't in your best interest to make a change, it could be that your lender is willing to make an attempt at rate matching. We don't see it as often. But either way, if there's a deal to be had there, it's better to be knowledgeable than anything.
100%. And I mean, I'm the first person to say, if you have a really good offer, I have jokingly told people, like, take it and run a few times over the years. There's been clients of mine even coming up renewal, where I'm like, I don't know what they were doing, but they're not offering that anymore. Take it and run. You know what I mean? And every once in a while I call and I'm like, I'm horrified that they even offered you that. That's an insult. Okay, let's fix this, like it's the A and Z conversation with renewals.
Really, you just want the information to be verified by somebody who doesn't work for whoever's making the offer. So
totally.
Somebody else, like if you want to know, is this a deal?
Yep, 100%. And does it suit your needs?
Well, I think that this is really good advice to those people that are trying to do the business of being a family really well. Because, if you look at how this would impact your life, in one way, you could be like, okay, we're going to have a mortgage for a less amount of time, and this is going to be good for our family's future. Or in another way, it could be that you are feeling that pinch, and that relief of a couple $100 allows you to, get another vehicle.
Totally.
Right? Like these things that families normally need as solving problems. And we really love how you help them solve problems. We've seen you deal with so many clients and really deliver those 5-star experiences that I appreciate you breaking down this renewal process for us today.
Happy to help. Like I said, mortgages are not a common topic of conversation ever. Even after somebody's bought a house, nobody's jumping up and down being like, I got a mortgage. No, I got a house is what they're saying, myself included.
Yeah, and I think that's also why they should recognize that since it's not something that takes up a lot of their attention, it's great to go and get some help on this.
100%. And that's honestly, it's what I do day to day, right? I mean, when I'm staring at everybody's rates and everybody's terms and what everybody's kind of doing, and we know how the winds shift with, like we said, are they playing the game to play the business, or are they just kind of out right now, right? I mean, I see all of those shifts. So it's nice to be able to say, cool, you have 43 other things on your brain. Let me take care of that one thing that you sort of kind of mostly understood when you got in the first time. Let's decode it and make sure you remember all those details and pick what's going to work best for you going forward, so that you can, again, sort of throw it on the back burner and get back to life.
Exactly. You know what? Get somebody that you trust to handle it, and then just go from there. I always think, it's not about finding the information. It's about finding the person that has the information, because it's much easier for me to kind of get a vibe for people than it would be to do all the research necessary to be good at this. Well, thank you so much. If you are looking for Cheryl, her contact information is going to be here. This is Cheryl from Dominion Lenders, Brokers for Life. And you can easily get contact for her online and also on our trusted expert list, because she's definitely one of our trusted experts.
Awesome. And happy to chat with anybody anytime you want to talk.
Fantastic. Well, thanks again for joining us, and thanks again for all the support. I hope that you have a remarkable day.
Awesome. You too. Thanks, Taylor.
Cheers.
Bye.